All right, time for big picture discussion. Joining me, Kevin Gordon and Nate Peterson from the Schwab squad this afternoon as we've got big earnings. Seems like it's time for tech to be rendered some judgment. Kevin Gordon, what's your framework for thinking about earnings over the next 2 weeks?
Yeah, well, it's not just tech. I think for every sector so far, what you're seeing, and we're not that far into the season. You still have fewer than 100 companies that have reported for the S&P. But I think so far the theme is the same as what you saw in the first quarter, where the market is being much more selective in terms of what's being rewarded, what's not being rewarded from a stock price perspective for companies that are just beating on earnings or also beating on earnings and sales. So I think that component on the top line, came much more into focus for the first quarter, but is coming even into sharper focus for the second quarter. And that's at least so far in the data and the price reactions that we're seeing from the broader market. That's where we're seeing a lot more of the focus. And I think, rightfully so, some of the more consumer-oriented names that have reported that have struggled under, higher labor costs and the pressure from that over the past year or so, that's where they're seeing, larger hits to actual revenue. And the tie-in with both of those has become a broader macro story. So I think it's very much in keeping with where we are in the cycle, the fact that as labor costs have gone up and as rates now start to be a little bit more restrictive for companies, that's probably going to be, a pretty dominant focus for the season, I would argue, for the rest of the year.
Well, the last 10 days, basically since inflation, that high quality basket, your guys' preferred way to get exposure to the stock market, has underperformed the high beta stuff since we've been doing this rotation. That's where I'm thinking about the tech stuff. Do you expect the quality trade to reassert itself? Because isn't that where it's supposed to shine on earnings?
Well, I will say, it depends on, I think, where the focus for quality specifically is. I would argue much of the focus has been on the small cap arena over the past couple of weeks, especially since CPI. And if you were to delineate, I think we talked about this last time I was on with you, Oliver, if you were to just use the one criterion of having earnings versus no earnings in the Russell 2000, the basket of companies with earnings is up by 18% over the past year. The basket of companies with no earnings is flat. So right there, you have a pretty nice percentage, spread in terms of performance over the trailing year, where if you've already been, sort of screening for that as an investor in an index like the Russell, you've been doing relatively well. Of course, the high momentum, high beta stuff that's been doing well year to date, inclusive of the Magnificent Seven and the, the broader mega cap universe, yeah, their performance is going to look relatively strong. And on a day like today, there is some strength, or like yesterday, there is some strength, up the cap spectrum, but also down the cap spectrum. So I think it gets back to the idea that, it doesn't necessarily need to be a zero-sum game, but from an investor's perspective, what are you benchmarking against? If you're just looking for solid performance, then you don't really necessarily need to worry about, everything that is high beta. But if you're specifically living in an index like the Russell 2000, then yeah, if you're focusing on profitable versus non-profitable, it's been a pretty great trade over the past year.
Okay. Past year for sure. And now I guess for earnings, we'll see if this kind of 2-week period of regime can last. Nate, as we've been in that regime, we got a VIX finally popping. This rotation that we've been trying finally led to some volatility pickup, first time really since April, but that was more a macro story where VIX was responding to the jump that we got in yields at the time. It seems like we've really shifted away from the macro as kind of the main force.
Yeah, it does. And, look, the VIX has been basically floored at that 12 or so. We know that there is the potential for the uncertainty out there. We saw, a spike up to 16 or so. A lot of that was in reaction to the market. It was a pretty, rough week. If you were in technology last week, 5% down on the NASDAQ 100. And then now we're back down, into the 14s or so. You look out to the VIX term structure, we're up to 17. When you get out to the election, there's still some uncertainty and some positioning uncertainty around what exactly means in terms of the post-election policy and what that means for inflation and interest rates. But, earnings obviously will be an important theme here. I think we're tracking 11% growth right now. The forecast for next quarter is about 7%. If you look at within technology, last week we had ASML, which reported sold off pretty ugly because the guidance was not good. And then we got Taiwan Semi, not a bad report. Stock still sold off. So yes, we've pulled back on some of these mega cap techs down to either the 50 SMA, the 100 SMA, if you're talking about Amazon, or the 20 SMA on some of these companies, which would be maybe a healthier setup, but I still think that it has the potential to sell on the news just because expectations are so high.
The regime here for options around earnings, Nate, does it look like then we should be getting some bigger swings? I mean, is that kind of what the move in vol is telling us, that this should be kind of an action-packed earnings, or is that an opportunity to say, like today earlier, where our trader in the morning show was looking at Tesla, trying to bet on it trading in a range? I mean, it definitely kind of changes the way we approach earnings, I feel like, when you're coming in at VIX 15.
Right. Well, I think that, yes, you're right. With the VIX moving up, that does tend to kind of affect, obviously, the implied moves. I think if we were within technology, within that segment, whereas generally where we get, the higher beta type names, if we were running up into all-time highs, Amazon was at 200, Alphabet was at 192, prior to last week. If we were running up into all-time highs heading into the results, that might be a little bit more significant. If I look at Alphabet right now, they're pricing in about a $12 move up or down on the weekly options here, which is about 7%, which isn't that extraordinary. Last time Alphabet reported, they did jump up about 9% or so. Look, Alphabet delivered across the board. They beat on every metric, announced a first-time dividend, announced a 70 billion share buyback, and then the stock moved up 9%. And then, yes, we're above that level, but that just tells me, or makes me a little bit concerned that, maybe they're expecting another home run type of a quarter this time out of the gate. And the reason it's important is because Alphabet's going to be one of those big names that's going to help set the tone for the next, 10 days or so here when we get more mega cap names.
A great reminder for us about the last quarter. A nice little setup, little tease for our earnings. Thank you, guys. Great stuff.